Welcome back, everyone. Ready for another deep dive? Today, we're tackling Adani Green Energy Limited, or AGL, for those in the know.
And, they've given us a lot to unpack this time around. We've got their raw financials, of course, always a joy.
Uh-huh. Yeah, Joy might be pushing it, more like bracing ourselves for a spreadsheet avalanche. But hey, that's why we're here, is someone's got to make sense of these numbers.
Absolutely. And not just the numbers this time. We've also got their media release to contend with, which is a whole other story.
Right, like getting both sides of the story, the company's PR spin versus the cold hard data. So let's start with, well, AGL's definitely trying to paint a rosy picture in their media release. Lots of buzzwords like significant growth and operational excellence. They're shouting about a 34% jump in operational capacity.
34%.
Yeah,
That's not just growth. That's like someone hit the fast forward button on their operation.
exactly. And then there's this almost comical emphasis on size. They keep mentioning this massive new plant in Gujarat. Apparently, it's 5 times the size of Paris. I mean, talk about grand ambitions.
It's interesting you say that. It seems very deliberate, right? Like they're trying to position themselves as not just another renewable energy company, but as a global powerhouse. The question is, can their financials back up that kind of claim?
Well, glancing at the top line figures, their revenue from power supply is up a respectable 20% year on year, hitting a cool 2,836 crores.
So not too shabby on the revenue front.
Not at all. EBITDA and cash profit have also gotten a nice little bump. But, and this is where I start to get a little wary, their borrowing has significantly increased.
Ah, yes. The age-old dilemma. It takes money to make money. But how much debt is too much debt, especially in a sector as capital-intensive as renewable energy?
That's the million-dollar question, isn't it? Are they leveraging themselves for future growth? Or are they headed for a debt spiral?
And that's where digging into the details of these financials is going to be key. We need to see what's fueling this borrowing spree and whether it's sustainable in the long run.
Exactly, because nobody wants to end up with a renewable energy empire built on a foundation of sand.
Couldn't agree more. All right, so we've got impressive growth figures from AGL, but also some red flags with their debt. What else is catching your eye in this media release?
Well, one thing that really jumps out is this strategic shift they're making towards the commercial and industrial sector, or C&I as it's known in the biz. They're even bragging about signing a deal to power a data center. Seems like they're not just content with those massive solar farms anymore.
Interesting. That's a pretty clear signal that they're trying to diversify their portfolio, tap into new markets. It makes you wonder, what's driving this move? Is it just about spreading risk, or are they seeing bigger opportunities in the C&I space?
Yeah, it begs the question, what's the bigger picture strategy here? Because this C&I push could be a game changer for them, or it could be a distraction from their core business. Only time will tell, I guess, but we can definitely analyze their financials to see if it makes sense.
Absolutely, the numbers don't lie. So let's have a look, shall we?
Yeah?
What's the damage on their balance sheet after 6 months of this supposed significant growth?
Well, buckle up, because their total assets have ballooned to almost 98,258 crores. We're talking a near 10,000 crore increase in just 6 months. That's a serious cash injection.
Whoa, okay, so they're playing in the big leagues now. But let's not forget about those borrowings we talked about earlier. What's the liability side of the equation look like?
Yeah, no such thing as a free lunch, right? Their liabilities are also up significantly. Seems their growth spurt is being fueled by a hearty dose of debt. So yeah, the big question remains, is this debt-fueled expansion sustainable, or are they building a house of cards?
Well, it's a bit early to hit the panic button, right? Debt in itself isn't necessarily a bad thing, especially when we're talking about a company aggressively pursuing growth.
True, true. It's all about context, as they say.
Exactly. And the context here is, well, AGL is pouring money into new plants, expanding into new markets, like we just talked about with the C&I stuff. That all requires upfront investment, so seeing their liabilities increase alongside their assets isn't entirely surprising.
Makes sense. So not necessarily a red flag, but definitely something to keep an eye on, like a pressure gauge. Got to make sure things don't get too hot.
Right, exactly. Speaking of things potentially getting heated, how about we dive into those legal matters? The ones stemming from that short seller report.
Oh yeah, can't forget about those. Always adds a little spice to the mix, doesn't it?
A little bit of a thriller element thrown in with our financial analysis.
Right. So AGL's stance is basically, move along, nothing to see here. They're claiming these matters are resolved, no material impact. But then they also mention some ongoing tariff disputes and other legal stuff.
Yeah, it's like trying to bury the lead a little bit, isn't it?
Yeah.
Acknowledging those ongoing issues, but downplaying their potential impact.
It does make you wonder, are they being fully transparent or are they trying to downplay some potential risks here? What are your thoughts?
Transparency in financial reporting is so crucial. You know, it's a delicate balance between providing enough information to be truthful and maintain trust, but not overwhelming investors with every little detail.
Right, because too much information can be just as bad as not enough.
Exactly. In this case, I mean, it's good they're acknowledging these ongoing legal things, but investors should definitely do their own due diligence. Don't just take AGL's word for it that everything's hunky-dory.
A healthy dose of skepticism is always a good thing, I think, especially when it comes to financial reports. But okay, let's shift gears a bit. We've touched on the C&I strategy, them aiming for 15% of their portfolio to be in this sector by 2030. But I'm curious, how big of a deal is the C&I renewable energy market anyway? Is this a smart move for AGL?
Oh, it's huge, and it's only getting bigger. I mean, think about it. Every business, from your local coffee shop to these massive tech giants, everyone's feeling the pressure to go green, right?
Oh, yeah. Sustainability is the name of the game these days.
Exactly. And renewable energy, it's a pretty good way to achieve that, wouldn't you say? So the C&I market, it's becoming a key driver in the whole global shift toward renewables. Lots of potential for growth there.
So AGL, they're not just jumping on a bandwagon here. They're trying to get ahead of the curve.
Exactly. They want to be the ones driving that bandwagon. But of course, new markets, they come with their own unique challenges, right?
Always a catch, isn't there? What kind of hurdles do you think AGL might face in this C&I expansion?
Well, for starters, competition. It's getting crowded out there. You've got your established players, but then a bunch of agile little startups popping up left and right. It's a real mixed bag.
So AGL is going to have to bring their A game if they want to stand out.
Absolutely. They'll need to leverage their strengths. They've got scale, experience, existing infrastructure. They need to use that to differentiate themselves, offer solutions tailored to what businesses actually need.
So it's not just about building more solar panels and wind turbines. It's about understanding those businesses' energy needs and actually meeting them.
Exactly. It's a whole different ballgame. They've got to be adaptable.
Makes you wonder, I mean, at the end of the day, AGL is a business, right? Their main goal is to make money for their investors.
Uh,
So how does this whole C&I push play into that? What's the potential for profit?
well, here's the thing. The C&I market, it often comes with higher margins compared to those big utility scale projects. Businesses, they're often willing to pay a premium for reliable green energy, especially if it boosts their image, makes them look good.
So potentially bigger profits for AGL, that's got to be enticing for investors. Yeah, makes sense. Got to appeal to that bottom line, right? So higher margins, potentially bigger profits. It does seem like this C&I push could be a smart move for AGL, but I imagine it's not all smooth sailing in the C&I world. What are some of the potential downsides?
Well, one thing to consider is that it's a different beast, compared to those big utility scale projects. The C&I market tends to be more, I don't know, fragmented. Plus, you're dealing with a wider range of customer demands. It's a lot to manage.
So more complexity, higher stakes. It's interesting to see AGL taking on this challenge. It makes you wonder, what's the end game here for them? What's their grand vision, do you think?
That's the million-dollar question, isn't it?
Yeah.
I mean, these moves they're making, especially this whole C&I thing, it tells me they're not content with just being a power generator anymore.
Right.
They want to be a major player in this whole renewable energy ecosystem. And that's a whole other ballgame.
It's like they're evolving right before our eyes. From a traditional energy company to something, well, much more dynamic, more ambitious. So for our listeners out there who've been following along on this wild ride, what's the key takeaway from all this? What's the one thing they should remember about AGL?
I think the big takeaway here is that AGL is a company in motion. They're not afraid to make bold moves to shake things up. And that can be exciting. It can mean big growth potential. But of course, there's always risk involved, especially in a sector as, I don't know, unpredictable as renewable energy can be sometimes.
Risk, high reward, right.
Exactly. So yeah, it'll be really interesting to see how this all plays out for AGL. They've definitely given us a lot to think about.
They have. From those massive expansion plans to this whole C&I venture. Plus, let's not forget those lingering legal questions we talked about. It's a lot to keep track of.
It is, and it highlights how important it is to really dig into these financial statements, Look beyond the headlines, get into the nitty-gritty details, because that's where the real story often lies.
Couldn't agree more. Knowledge is power, especially in the world of finance. Well, this has been a fascinating deep dive, to say the least. Thanks for joining me on this one.
Anytime. Always happy to geek out over some financial statements, even if they are a bit drier than the Thar Desert in June.
Until next time, happy investing, everyone, and remember, always do your homework.